Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex quick look. I'm going to take a look at the Aussie versus US dollar as we head toward the end of the week and into the new trading week next week. Looking at this currency pair, I'll put a box around the trading range for this week and then talk to that box. And what we saw earlier in this week was moves up and down on Monday and Tuesday. Those moves to the downside found support ahead of the 38.2% retracement. That's of the move up from the low price that we saw at the beginning of July to the high price that we saw, well, just last week. And the 38.2 came in at 0.67814, and our low prices on Monday and Tuesday came in around the 86 level and bounced to the upside here, bounced to the upside here. On the top side, where did the bounces stop? And if we look at this swing levels through here, this defined the break to the upside, the extreme to the upside. We fell back below that level, and we started to use that level as resistance on both Monday and Tuesday. So everything was lining up pretty good with a ceiling up here and a floor down here. We fell below the to the new low here, bounced up and found resistance against the 100-hour moving average. That gave the market the go-ahead to push further to the downside. That moved to the downside, so the price trade above and below the 200-hour moving average, but above the 50% retracement level. On Wednesday's trade, the price couldn't get below that level, and we started to see a rotation to the upside. This move right here on Thursday was as a result of the Australian jobs report, which came in better than expectations. And where did the price stall at? Well, we stalled right against this old swing area again, and the market rotated to the downside, and that final move to the upside saw the price extend above that swing area, which should have opened the door for further upside. But it couldn't hold. The initial jobless claims in the U.S. came out, and that was stronger than expected. So we saw the full move from the Australian jobs report be reversed from the U.S. jobs report, and the bias has remained more to the downside since then. Looking at the price action today, the high price that we saw here was able to get back above the 38.2% retracement, but find resistance again against the levels that we saw on Monday and Tuesday, or near the levels that we saw on Monday and Tuesday. That put a lid on the pair near the 0.6786 level, and we saw a rotation to the downside in the London session, into the New York session, to new session lows for the day and the week in trading in the New York session. But you see this green line right here, this represents the 200-day moving average, and we got within about 8 pips of that at session lows today, and we are seeing a rotation back to the upside, back toward the 50% retracement and this other swing area. That swing area comes between 0.6737 and 0.67546. If I were to go back in time, just watch that yellow area right through here. You can see that there was a number of different swing lows and swing highs through here, where the market found was creating a floor through here, broke below that floor there, and came back up to the level here, rotated to the downside before breaking to the upside and trading last week, moved back to it on Wednesday, came back and fell below it in trading here today. So this area is now going to be resistance. So if we were to, as we head into the weekend, as we head into next week, this is going to be close resistance for the Aussie versus US dollar. Stay below, and the bias remains more to the downside. Now, having said that, the 200-day moving average and the 100-day moving average down here, along with the 61.8% retracement, make for pretty formidable support on the downside as well. So we're going to need to get below that level to increase the bearish bias here and start to retrace the whole move to the upside that we saw in the month of July. So sort of at a crossroads with a little bit more of a bearish bias below the 50% retracement level, or I would say a more bearish bias below the 50% retracement level, below this swing area. Stay below that level, and all things remain more to the downside. Move above it, however, and we could see a rotation back up toward the 38.2, toward this 86 level, toward the 100 and 200 hour moving averages, which are starting to move down, at least the 100-hour moving averages, and we'll see how all that plays out. But close resistance right now, 0.67546 is the ceiling that we want this level, this currency pair to hold on the downside, get below the 200-day moving average. So there you have it, a look at the Aussie versus US dollar to prepare you for the rest of the day and for the new trading week, more importantly. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.